Welcome to the Altcoin Hour, your weekly alpha. Yeah, we breaking down the charts, flipping bags, playing smart, from the dips to the moon shots, connecting all the dots. Let's get it.
Right. Hope everybody's doing very good today. Another hand clap for the market. Nice and, green, as you can see below. Pretty nice. We're going to be talking about not only the market, but some plays. And, I hate to say plays because it sounds cheap, but let me cut this music down. I want to talk about projects that have the same potential as Chainlink. This is later in the show, that will be able to produce the same actual, potentials and success. And I'm talking real world success. A lot of people aren't talking about these projects, but they're kind of built the same way. And what we saw Chainlink do, what they are doing, how they're being accepted, I think it's pretty interesting. So, and this is what I'm targeting. Not only the L1s that are kind of have that infrastructure as well, but these different protocols that are just kind of under, the weather right now when it comes to the market because of all this institutional inflow and everything that's going on. But we're going to be jumping into a lot of stuff today. So I hope you guys are doing well. It is green at this point in time, $81,000. We're going to get into Bitcoin, get into the altcoin countdown, look at some prices. Altcoins are doing what they're supposed to do, especially when Bitcoin is moving up. We're going to be talking about the slight decoupling effect. I think it's still coupled, but we'll get into an interesting article here in a little bit that basically states that Bitcoin may be slightly decoupling from US stocks, from the futures market. We'll see. I think it's far-fetched because I think they're tethered at this point in time, especially what you see, what's going on with the Middle East. So we're going to get into that because there's a nice report on that too as well. But when it comes to the macro, we're definitely going to dive into that because I think this is a bull trap. And a lot of people disagree with me. I think it's a trap. And it's really devious trap too as well. So again, hand clap to you guys that are coming in. All right. Glad to see you here. And let's go ahead and get into this report. So as we migrate into the report, let's go and start with Bitcoin and we'll get into some reports. Take a look at the stock market because, I think the stock market is it's a bad barometer because it is being, manipulated profusely, manipulated crazily. The manipulation is crazy. So I don't like to look at that because a lot of people are looking at that and they're saying, especially the people I've talked to recently, it's a little weird. It doesn't make sense what the US stocks are doing right now, considering what's going on in the Middle East and considering all the commodities that have halted, the shipping of the raw materials in the oil, shipping. Brent is 112, WTI is 105. Spot price, you can add $30 to that. So what the stock market is doing really doesn't make sense at all. And it's causing the RSI, as we look at it real quick, it's causing the RSI to go completely bonkers into the overbought section. 55 going on 56 RSI score, which is very, very scary to me because a lot of people are following stocks and they're following this Bitcoin ride up, and there's FOMO here. There's a level of FOMO here. And you have the ETFs, which there was some decent outflow when it comes to, profit taking just recently, pretty considerable. But when you think about the ETF inflow, it's kind of offsetting that. So you're not really seeing, it's so complex when it comes to the inflow, when it comes to the volume at this point in time. And I was looking at an old report that came out in 2025, and it was basically predictions when it comes to the macro, when it comes to crypto regulation, which a lot of that came true. We don't have crypto regulation, and the macros is complex right now. So, and then you add in what is going on in the Middle East, which I don't think that was baked in the cake. But I'm looking at this RSI score and I'm like, okay, people are starting to move because Bitcoin is moving. People are starting to, go into overbought situations, including the market, essentially the entire market overbought. I'm going to go ahead and call it. It's going to be overbought probably by the end of the day. you may see Bitcoin go up to $85,000. But again, it's probably one of the most magnificent bull traps I've ever seen in my life, because none of it makes sense. None at all. And I know that's bearish. A lot of people don't want to hear that. A lot of people want to hear the cheerleading of the market, rah, all this good stuff, blowing the whistles. Everything is good. The bull market is coming. I'm sorry, but I can't do that. I'm not going to do that. My particular platform doesn't depend on that, right? I like telling the truth. And what I'm seeing here is a trap. Big time, because it doesn't make sense. The stock market is completely ridiculous right now. And if you factor in geopolitics, if you factor in there will be no ceasefire, and actually the ceasefire is done. There is no ceasefire. It's already, missiles are going, people are being, unalived again. You have ships that are being hit. So regardless of what's coming out the White House, the war is back on. Okay. We know this to be true. The UAE got hit again. It's crazy what's going on right now, and it's not being reported. So bringing it back to reality is what I like to call it. And this is what we do here. We talk about reality, not, fantasy world. This is going to affect a lot of buyers in the bad. A lot of people are about to lose some money because there's no way this is going to $100,000. There's a lot of sale pressure, and it's even more because we're in overbought territory because of the fictitious movements of the US stocks in the way Bitcoin, and some say it's decoupling. We'll get into that report here in a minute. I don't agree with that report at all. But it's very slight. So to call it a decoupling effect, that adds more FOMO. That puts more fictitious language and more fictitious beliefs and hope in the market. And I don't think it doesn't. It just makes this really bad recipe for a gigantic fallback or correction. And this is what the market doesn't need. We're going to get into a report that's basically saying that, here's the headline: U.S. voters rank crypto last before midterms. And we're talking about real people outside of the space, not you and I, not builders, not, users of platforms and protocols, not your stakers. We're talking about real people that are going to move the needle, real world adoption. They don't give a damn about crypto right now because of what's going on, all the noise. And I think that's significant. We're going to talk about that because we need those real people to come in and partake, to use this beautiful tech. We need real people out of this space to come in. We need that real world adoption. And as far as I'm concerned, Chainlink is the only one that's actually, crossed that bridge. I'm just going to say it like that. And, a hand clap to Coinbase for that. I'm sorry, for Chainlink. They're the only ones that prove to me that their protocol is actually adoptable. I'm sorry. What's going on, Steve Hawk? Welcome to the show, brother. They're the only, that's the only dev team, the only protocol that is actually proof to me that they're worthy of my investment, because they're actually doing what they said they was going to be doing. They're being adopted. So, but I have to tell you, later in the show, I'm going to give you some projects that actually have the same potential that no one's talking about, because maybe the price is low. Maybe things aren't going as well as they thought it would be, but the product is built and the devs are still active and the adoption is coming. And the spearhead of that adoption was Chainlink and the Amazon, situation. Chainlink has done other things as well. It's just the Amazon thing was the only thing that's been, promoted, but they've done other things. They've been adopted in the real world way beyond that. But before the Amazon thing is just big. It's really huge news for them. And it makes for good TV. It makes for good, marketing. But we're going to get to this U.S. voters because it's crazy. It's like 1% of registered U.S. voters name crypto their top concern. 1%. 3% call it the single most important 2026 midterm issue. That is very small. That's a very, very small, low priority ranking right there. 22% say crypto is an important issue, and 40% would vote for a candidate aligned with digital assets as well. You have that as well. But the actual attention to this situation is very minimal. And I think it's because of a lot of the things that are going on overseas. In the economy. The economy, stupid. It's all about the economy. That was a famous quote. It's the economy, stupid. That's what matters, because money moves markets. And if people don't have money to spend, How do you think that's going to affect the institutions? Welcome to the show, Fearless. Hope you're having a good day. How do you think that's going to affect retail? It's already affecting retail. If you're looking at what's going on with these, quarterly reports that are coming out in retail, it's not good because people just don't have the money. They're saving money. A lot of people use their income tax refund not to go buy a lot of things, but they're saving it. They're paying bills and things. They're not investing. And I'm going to tell you something. The reason why stock market, the manipulation is so great when it comes to the stock market is because there are a lot of 401ks that are actually tied up into US stocks, especially the tech. Okay. So it is very, very important for the government to keep the stocks rolling, to keep tech rolling, because all those 401ks, all those investment plans that are wrapped into the 401k, they can implode if the stock market just completely crashes. So there's a number one priority is to keep the stock market green. But how long can they do that? Because if you think about what's going on right now, it shouldn't be green. So we know it's a fictitious pump. It's manipulation. And the underlying, cause for that and reason for that is to keep those 401ks green. Because when 50 to 60% of the 401ks go upside down, that's when America's going to start really grumbling. That's when the retirees are going to be like, what the hell is going on? So, that's just my theory on that. I think that's why you see this unbelievable, ridiculous US stock market right now. It's crazy. It doesn't really correlate with what's going on in the real world and with the economy. But that has always been the mantra. That has always been the separation. Main Street and then, the market. They don't really correlate. They don't run parallel. There's a divergence there. There's always been a divergence there. If you take a look and you go out and you talk to people ground zero, they're not happy. Okay. But let's get back to the market. We'll get into some more actual aspects too as well. Cryptocurrency total market cap is pushing almost 3 trillion, which of course, we have this huge, inflow coming in. We did get some profit taking as well. But if you're looking at Bitcoin's chart, you're like, that was absorbed quite well. Well, it was because of the ETFs. Institutional inflow. I think MicroStrategies, OTCs have been paused. We have other institutions as well that are buying, but they're not publicly, the marketing isn't out there. People aren't really talking about it. Everybody talks about Michael Saylor when he tweets about the OTC buying, and then that increases the FOMO. But you have other funds and other institutions that are buying as well and using these, this particular vehicle. But in particular, we're talking BlackRock. They lead the pack. All right. They're pushing a Bitcoin fork as well. But if you look at these numbers, which was these numbers were registered on the 3rd of this month. I mean, pretty phenomenal numbers, pretty much coming out of April, pretty phenomenal numbers when it comes to Bitcoin and Ethereum as well, to the tune of, and we'll go ahead and total those two giants up, $719, all right, $1 million worth of inflow. Not bad at all. Not bad at all. The bulk of that was Bitcoin, obviously, because we've had a lot of selling. A lot of OGs are selling their Ethereum. Even, Vitalik has been catching a lot of, he's been selling a lot of ETH lately. He's been selling a ton of ETH, but all of them do. And I don't freaking blame them. A lot of them understand what's happening. Get your money while you can. This thing is going to correct. The stocks, crypto, and then the beneficiaries are going to be the metals, gold, silver, copper, palladium. Especially if it really goes all out, if war just completely goes bonkers, it's going to be a major correction. And right now, what you're seeing is a pretty fantastic trap that's being set. So I kind of hope it doesn't go to 85K, because that's going to send a fictitious wave across the board that everything is okay. And it's not. It's not. The projects are fine. All the solidified projects and the protocols, the DeFi, protocols, everything is good there. DeFi is doing good. In fact, we'll look at that TVL. Stablecoin traffic is amazing. The actual fundamentals of cryptocurrency and blockchain tech and DeFi, it's okay. It's good. But the actual fictitious movements is what worries me, because once the bottom, kind of like falls out and we get this major correction that's going to be coming up, I think within the next couple of weeks, a lot of people are going to be caught up in this, because you have people bankrolling this particular pump, bundling large amounts of money not only Bitcoin and Ethereum, but you have some alts that are getting massive inflow right now. Yikes. You gotta pay attention to what you're doing right now. You have to pay attention to what's going on with the market in these indicators, and how off it is, how nothing correlates. Everything is a mess. Be careful with what you're doing right now, especially right now, because the Bitcoin dominance is still absolutely tremendous. So a lot of these alts, there's substance there. The chain link movement, I totally get it, right? We know why that's happening. That's substantial. That is provable. There's proof, for that, that particular reason. But everything else, I don't know. I'm not calling BS on it, but you have to be very, very careful with what you're doing with your money right now, because you could end up losing a lot of money with this thing correct. So the question is, did the bull market line just flip? I don't think so. I think it's just reacting to the manipulation. So we have Bitcoin, $81,000. We'll check on this up across the board. Everybody's, this is beautiful. Everybody's so happy about this. I totally get it. But when you pull up a month, let's go ahead and pull out a month. And I'm going to stretch this up. We're going to go all the way back to 2023. This looks amazing. If you're zooming out and you're looking at Bitcoin right now, you're like, oh, this is freaking amazing. But look what we have here in 2025 in September, right? We had a reduction in price. Huge. You guys know what happened there. This is where we're at right now in March, going into March, right? Coming off that huge dip. And we'll go all the way back to August the 1st. You know what happened, right? Now, we're recovering from that. We're still recovering from the August 2025 debacle. And this is ETFs. You take the ETFs, you take all that away, and we're talking 105 we actually eclipsed in August. That was phenomenal. Look at what happened, though. Look at what happened after that. Massive amounts of profit taking, massive amounts of fear that cascaded. There were some other issues there as well that caused that. Okay. We're still trying to recover from that 81,000. And I'm going to tell you, we got all the way down to, I think, 59,000 coming into the year, February. Pretty decent market crash. We're still in recovery mode from August the 1st, guys. So, of course, if you bring it into, you zoom it in, you get a short glimpse of what's going on within the last hour, 4 hours, or 24 hours. You're still seeing that recovery effort. So we'll bring it back to an hour because everybody likes that snapshot. It looks beautiful. It's up 1%, almost 2%, $81,000. Tons of manipulation. And I'm going to show you why this looks this way. All right. This is why everything looks so bullish in the crypto market, because look at stocks. Crazy, ridiculous movement right here. S&P 500 up almost 80 points. All right. Dow Jones almost 400 points. NASDAQ, which is, I think Bitcoin loves it to trace this. Almost 400 points. But yet all hell is about to break loose in the Middle East. You have commodities, I'm talking oil, reaching up to, these spot prices are almost 145 per barrel. This is what they're paying for the oil. And by the way, the ships aren't moving. And if they are moving, it's not a lot of oil on those ships. I.e. Japan, the delivery they took was like half a ship. I think it was a ridiculous amount of oil that they received. So you're looking at these fictitious manipulated stock numbers that make no sense at all. And I understand why they're doing this, because of the 401k attachment, the investment fund attachment. I totally get it. Trump ran on this, So I totally get it. You look at the futures, look at, just everybody's happy about this. This translates into the crypto market. So if the stocks are doing this, people are like, okay, of course crypto is about to just go off the chain. So you see Bitcoin moving over 81 because of this FOMO, because of this fictitious type of movement here in this situation. Now, as I move to crude oil, I'm going to tell you guys, it just doesn't make sense to me what's going on, especially with the news that's coming out right now. All right, and we're going to get to the UAE report, because I think it's actually, we're probably about to get to that now, and we'll talk about this fictitious decoupling effect too as well, that this narrative that is being pushed here. And mind you, the whole theme of the show today is the incoming correction. And this is why we're doing this, because I just want to put this out. And everybody's talking about the green, everybody's talking about good times. No, we need to talk about this correction that's about to come up, because a lot of people are going to lose a lot of money here in a couple of weeks. And I'm going to go ahead and call it. So don't say I didn't warn you. So you're looking at these crude oil, you're looking at $100. This is a heavily manipulated situation. All right. Spot price is 135. This is the futures. We're looking at futures right here. The actual price per barrel that people have to pay, okay, is around 135, not 101. This is what's happening. Okay. So we move back and I want to go to Brent. 109. So you're talking about pretty close to 142 for Brent. So with these high energy prices, this translates to high pump prices, fuel prices. Okay, that affects transportation, that affects logistics, that affects products that need to be transported to these retail stores. That actual situation increases fuel surcharges as well, and that gets passed on to you and I. Now, this is going to tremendously grow over the year, within the year, especially going into the third quarter, going into the fourth quarter. Who knows what it's going to look like? In fact, I hope the war is wrapped up and everything is back to normal. I don't know how, what's going to happen after midterms. I don't even know what's going to happen with the Clarity Act, because the ethics language is going to, it's a huge roadblock right now. So we don't know if we even going to get crypto regulations. That will be another factor for correction, because it's going to be a bomber. It's going to be very bearish to not get the regulation, right? So when you're looking at these numbers, these could easily blown up 2-3x when it comes to these oil prices. And God forbid we see a future price around $200. That means everybody on the West Coast will be running from the West Coast, because your gas per gallon is probably going to be around $15 per gallon. So you're going to see a mass exodus. People are they're not going to want to spend money when the shit hits the fan, is what I'm trying to tell you. So a lot of people are going to be pulling money from markets, pulling from their 401ks. Major retraction. This is the correction. This is the soup that we're looking at forming right now. This is the actual ingredients you have here that is kind of like spread out right now, but it's coming together. And the recipe is for major disaster economically. That is going to pull so much money out of these markets. This is why I'm telling you guys, beware of what's going on, because I don't see a light at the end of the tunnel. I don't see our government pulling back on the war effort. Iran they're on the gas right now. They don't give a damn, right? This is all about survival for Iran as we get back to Bitcoin here, right? So this affects everything that I'm talking about. Money moves markets. What you're seeing with Bitcoin is all institutions. This is the big boys. This is the big money, funds, BlackRock. This is not retail. Retail can give a damn. They're more worried about egg prices and milk prices, putting fuel in their cars. Most people are spending almost $100 to top off their fuel tanks. They're not worried about investing right now. In fact, they're liquidating. Okay, so I want you guys to understand that what's holding Bitcoin at 81,000 has nothing to do with real sentiment, has nothing to do with retail, has absolutely nothing to do with grassroots investing. This is all institutional money. And I would say that Bitcoin has been completely officially hijacked. Officially hijacked. So what does that mean for you? This is the thing. What does it mean for you? Well, it means you have to be very cautious. Very cautious. It means when you're investing, you're going to have to cut the fat, because a lot of the investing that we're used to in the last 5 to 10 years, that's out the door. You're just going to lose money if you continue to invest in that. You're going to have to understand. You're going to have to understand DCA, properties as well, how to do that properly going forward. Because a lot of these solidified platforms, we'll talk about them, these L1s and these platforms that mirror what Chainlink is actually doing, they're going to succeed, because they're, when it comes to regulation, it's going to boast to those platforms. But right now you're looking at Bitcoin. We're going to go through the top 25. We're going to get into some reports. $81,000. It looks beautiful, but it's fictitious. This could correct at any time. The wrong missile gets fired at the wrong, infrastructure and it's a wrap. This thing goes down. Ethereum, $2,300, up 3%. Let's get through the rundown. Massive selling with ETH. We all know everybody's jumping on Vitalik, but there's not just Vitalik. You have retailers just leaving ETH as well. You have a lot of people that are just cashing out, not because ETH is horrible, it's just just the sentiment. People understand what's going on. If you're a real true investor, you know your shit, you're seasoned, you already know you better take profit now. This is the time to take profit because this ain't gonna last long. I'm just telling you straight up. XRP 100, not 100. Jesus, hopefully it's not. That would be crazy if it was $100. Some say it may get up to 100. I don't believe that, but it's up 2%. Within the 7-day period, $1.40 for XRP. Everybody's pretty decently happy about that. It's getting pretty close to $1.45. BNB is roughly $628, 68 cents. It's not very. It's kind of consolidating pretty well. Let's go ahead and say with the BNB coin, doing quite well. I believe it's weathering the storm better than most of the top 15. Solana is still cruising at $80, 85 roughly, up a bit across the board, 2% within the 7-day period, week period. Pretty decent weekly, movement with Solana, but I'm just seeing a consolidation here. 40, Jay, you said more than 40 to 50% crash. That's what I'm talking about, man. And we've talked, Jay, and everything you told me, Jay, 5 months ago is coming true, and that's what's scary, bro. I need to talk to you too about it because I've seen some things that happened on the cruise ship recently with the Havanta virus. I want to talk to you about because you mentioned that as part of the predictions as well. But yeah, 50%, yeah, easily, because it's so pumped. It's so pumped with a bunch of air. There's no substance here, barring the ETFs and the institutional inflow, which is real. We see that on Arkham if you're tracking wallets. The rich boys, the Gemini twins and things of that nature. These private investors, of course, yeah, they have it, but it's all ETFs. And I know people hate it when I say this, but if you remove the ETF movement and you remove all these ETF vehicles, we're easily at 58,000 right now, even with Michael Saylor's OTC. So you better thank God for the ETFs because, my Lord, that's what's doing it. Not retail. Retail is running. Every time the ETFs pump this market, retail gets the hell out. The smart retail, they take their profit. They take the profits. Hand clap for the ETFs. Hand clap for the ETFs. Why not? Because they're the savior. They're the market savior because Bitcoin's dominance. That's the reason why Bitcoin's dominance is so rough, so hard on altcoins. And this is why we never saw altcoin season materialize. You can thank BlackRock for that. They completely squished. It completely annihilated our altcoin season. I don't think we'll ever see one again. I could be wrong. Tron 34, we're not even going to talk about Tron. Until I get access to the Sun protocol, I don't want to talk about it. I'm sorry. It's 34 cents, by the way. It's doing pretty well, actually. Up 6%. Dogecoin is pumping. It's almost 12 cents. Pumping pretty hard, up 14%. It's probably outperforming. No, Zcash is, I think, is a big performer next to Tonecoin, which that was a pretty good news that came out of the Tonecoin situation. Pretty interesting, too, by the way. Not going to invest in that particular coin because there's 2 coins there, and I'm talking, where is it at? Let me see here. Where is it at? JST. Be careful with that, guys. There's actually 2 coins within that protocol, and both are, I don't think they're investable. That's just my take. Just my take. Jay says this 5-year whole financial system will change, major reset coming. Absolutely. It might be good or more. I think it's going to be very scary because people don't see it coming, Jay. But it's good for the space. I think it's going to really consolidate the space down to where it needs to be. The cream will rise to the top. All the BS will be flushed. And I think this is what the space needs. There's so much wastage in this space. There's so much redundant technology that needs to be flushed. And a lot of mischievous activity just needs to be flushed. We're going to get that, especially if we finally get these, the Clarity Act and the Market Structure Bill. If we can finally get that through, and I think you'll see the flushing. And then, God forbid, the Bitcoin fork. My Lord. It's going to change this whole space. And I don't think a lot of people are going to like it. I'm going to love it. Hyperliquid is doing very well. It's finally up over $40. People are really excited about that. Leo is at $10. Cardano is moving up 25 cents. It's up across the board, pretty decent. Bitcoin Cash almost back over I know it is. It's over 450, so that's pretty decent for Bitcoin Cash, which is a fork as well. But you got another eCash is what they're going to call it, which a lot of people are saying they shouldn't call the incoming Bitcoin fork eCash because there's already another eCash, which is weird. But Bitcoin Cash was never able to capture the value in the price amount of Bitcoin. So I don't know. We'll see what this new one does. Jay says we have 5 years to earn. After then, AI will take over our job majority. No, you're right. And see, I forgot to talk about the AI factor when it comes to Bitcoin as well. But when it comes to the stocks and how they're pushing, it's all led by AI. The hope of the takeover of AI and the actual, nuances of AI and what it's going to do going into the future. I think it's too early. I honestly believe that when it comes to AI, it's not ready for prime time. We already see the issues that are going on. One situation completely wiped the system's history. Luckily, they had a backup, so everything was restored. But I don't think it's ready. I'm looking at a lot of these different, robots that are malfunctioning. I don't think it's ready to be implanted, but the data centers, they're continuing to be built. Some were canceled, but the data center effect is already having an effect. People don't want those in their cities and their municipalities and their counties and, in their states. So it's being forced. People are having to pay. It's interesting. Jay says, do you think alien is there? What do you mean, Jay? You talking about extraterrestrial intervention here is going on? Is that what you said? Clarify that for me, brother, so I can answer that correctly. Monero, $400. These privacy protocols are pumping, which they're, we've already got the actual take on that as far as legality. Mixers are going to be acceptable. They're not going to be regulated. They're going to get a free pass, so we'll be able to use these mixers. But there will be some regulation, per se, when it comes to money laundering, watchdogging, AML, things of that nature. But they're not going to be shut down. I didn't think they were going to make it through this language, but they are. They're being recognized as usable tech, legal, pretty decent. Chainlink did move up. I'm going to look at this Chainlink chart. I want to look at this because we're going to talk about Chainlink-like platforms that are built, not necessarily infrastructurally like Chainlink, but they have the same properties, and they can actually lend a hand when it comes to these, like what these oracles is doing, i.e. Chainlink. There's 3 of them I'm going to talk about. And I think you need to be aware of them because I think they're going to be adopted because Chainlink is going to spearhead this. This is what they're going to. So a lot of people are looking at this and they're like, okay, what can we leverage? Anything else that may be able to do what Chainlink is doing for Amazon? Of course you can. And we'll talk about 3 of them. $9. This thing went up pretty, almost eclipsed $10 again. But again, you have some profit taking going on here, which is, of course, May the 4th, you have some pretty decent profit taking, some fighting with inflow versus outflow. But then your recovery is beautiful with Chainlink. You're almost back up to $10. So, and I want to hand clap again, Chainlink. I'm very proud of Chainlink, what they're achieving. Because when I look at this bearish notion when it comes to US voters on crypto and how they're really not, into it, it's not really number one. It's the back burner territory for a lot of the voters that going into midterms. It's kind of bearish, but I totally understand it because the only thing that they're actually probably learning about is Chainlink, but there are a number of platforms and protocols and blockchain technology that mirror what Chainlink is doing, not necessarily infrastructurally, but they can compete. They can offer services as well in the real world. But I don't know what's wrong with these dev teams. They're not marketing correct. They're stuck with the internal marketing. They're stuck on X, right? They're stuck in the Telegram. They're stuck in Discord. They don't want to branch out into the real world. I don't know what they're afraid of. It could be regulation. So I'll give them that, but that they're not going to be able to, hang on that once we get regulation. So we'll see. I think it's going to be very interesting what happens when we do get regulation passed. There won't be any excuses anymore. I'm going to be watching a lot of dev teams to see how they move. I'm going to be watching a lot of these projects and protocols that essentially are saying that they can offer a lot. Let's see what you're doing post language, because there will be no roadblocks anymore for a lot of you. It's going to be interesting. So I'm going to be in 100% observer mode, essentially. Jay is, what are you saying, Jay, here? 100% they are in government. So you were talking about alien intervention. Got you. So I got to read this, but because I'm into this hardcore. 100% they are in government body and controlling major decisions of the world. Absolutely. Been that way for years, bro. Our brains have some limits. This is what you said. Absolutely. We're intellectually capped. You're so right about that. The whole truth is hidden from us from government for ages. You're right, man. You're right. You're absolutely correct on that. Absolutely correct. Welcome to the show, Mom. I hope you're doing absolutely well today. So as we lead down to Canton, 14 cents dial, not able to stablecoin. I don't even want to talk about that. It's interesting infrastructure there too as well. XLM, even though it's a stablecoin, there's some infrastructure there. I may talk about that, but you probably don't know about. 15 cents for Stellar. Stellar is down. When I look at these altcoins, Stellar for some reason is the dark horse. It's down. What's going on with XLM? Why is it sagging so much? It's very interesting. Tone coin is up 43% within the week, 28% within the actual 24-hour period, 3% up within an hour. What's going on with Tone coin? Big time inflow. You can see it on the chart. This is a 1 hour chart with Tone. Almost $2. Huge. I mean, this is a massive inflow. The volume is like up almost 400%. What the hell happened? What the hell? Let's go ahead and talk about this, man, because this is very interesting. We have a little output here. The primary reason, Telegram founder Paul Durov, I think is Durov. I think I don't even know how to pronounce that last name. Pavel announced Telegram is replacing Tone Foundation as the network's primary driver of largest validator, coupled with a 6-fold reduction in transaction fees. Secondary reasons are going to be surging ecosystem activity as well. I saw that too on DeFi Llama earlier, with meme tokens like Dogs and Note rallying over 70%. Damn, wish I would have caught that. Indicating strong capital rotation into Tone as well. We see that on the chart too as well. I think the primary reason is why you see that huge inflow into the chart, but as well, a secondary reason makes sense as well with that 70% increase in meme activity. If Tone holds above the 1.78 Fibonacci support level, this is what's being said. The momentum could test a $1.97 resistance and break, but it could break below 170. I think it's actually pulling back right now, honestly. I think that 50-day moving average on Tone was around, 116, I believe. So I think you're already seeing a pullback. That's the actual consensus report on what's going on here. You did see a pullback to around 179, I believe. I'm seeing this, but you're seeing some buyers. It looks like it's going to start consolidating around 185, $1.85. So some pretty interesting news. Hand clap to Tone. If you're into Tone. Yeah, look at that, man. It looks like a meme that just got rediscovered again. It's pretty interesting what's going on with Tone. Very interesting. So we'll round it up with World Liberty Finance. Not World Liberty Finance. That's the actual stablecoin. They're going to have a problem with that. The Trumps are going to have a problem with this particular situation. If the ethics language that we see, that I saw in the markup, if it doesn't get altered, you may see this go away. Or they may just sell it outright. World Liberty Finance may go away too as well, because it's a conflict there. But I digress from there. Meme core back up 30% within a 24-hour period. A lot of people are buying meme core all over again as well. As you can see, this huge buy. Someone told me this was a team that was doing this, manipulating this chart, which is crazy. Stop doing that. If you are, stop doing that. You're killing people, man. Crazy. And I'm talking about financially, not, literally. Litecoin, $55 is looking pretty decent. AVAX, I got to tell you, AVAX at $9 is a great buy because of what's coming. All right. They were supposed to be integrated in Amazon a couple of years ago. So I don't know what happened. Chainlink is in, the Oracle, infrastructure is in. But I remember reading a report on AVAX Amazon partnership. It never materialized. So we'll see what's going on with that. I'm very bullish on Amazon going forward post language. We can get there because that infrastructure can be leveraged big time. What's going on? Wolford, welcome to the show. Hedera, don't sleep on it. It's a very usable protocol, especially going forward. Don't sleep on HBAR. Keep it in your watch list. It's at 8 cents right now. Some interesting things could happen. $3.8 million market cap. A lot of these market caps have come down from ATHs. They're far from the ATHs, so they're buyable. Just make sure the tech, make sure you're DCAing properly in these, solidified platforms that can be used. And most importantly, you got to make sure they can be used, because a lot of what's listed here cannot be used either regulatorily, when it comes to, the compliance, or it's just not built for what's coming. It's just BS tech, copy and paste stuff, right? So HBAR and AVAX, I don't see that here. SUI, 95 cents. It's actually up 5% within a 7-day period. Doing pretty good within the last 24 hours. But again, all of these alts are following, although some are decoupled, they're just following Bitcoin. Because I've seen nothing new when it comes to SUI. No new reports, just following Bitcoin. HBAR, no new reports. AVAX, just smoldering. No new, developments with Altcoin. Just a lot of joking. I don't even see the jokes anymore. They're just following Bitcoin. Tonecoin is the only substance that I see, because there is reason for this humongous spike in the Tonecoin coin. There's substance there. All right, you can look it up. We know why that's happening. But these other alts, they're just following Bitcoin. No substance there, and that's what worries me, because a lot of people are FOMOing into these arts, into these particular alts, and we're just going to leave it at that. But I don't want to down it too much. Get your money, DCA properly in these solidified situations. We're going to get to these reports though, but hand clap for the green. I'm not going to hate. Hand clap for the green. I want to get into these reports, right? Specifically this particular rally here. This is what we're going to talk about here. Headline: Bitcoin rally breaks from US stock market and mixed macro data creates bullish setup for BTC. Now, I totally disagree with this, but I'm going to go ahead and go through this, because it's a fictitious, point that they're making, because when I look at what's going on with US stocks, there's really not a large divergence at all. Not at all. It's still neck and neck, barring some incremental selling, some incremental institutional inflow. Subheadline: BTC nears, and it's already there. It's there right now, 81,000, while oil yields and the actual dollar moves against equities. But the next morning showed why the break may be a two-driver market instead of a clean hedge. Now, here's the thing. Basically, what they're saying is, and we'll read a couple of lines here, is that Bitcoin is kind of moving to its own step. I disagree. It's still tracing with stocks right now, with the NASDAQ. All futures are being manipulated. So I look at spot price. So Bitcoin is chasing or running neck and neck with the US stock market right now. I just showed you what was going on with the stocks right now. In the green across the board, NASDAQ is pushing almost 400 points above right now. It's crazy, ridiculous right now. So Bitcoin is going to follow that. The same people who are pumping and dumping US stocks are doing the same thing to Bitcoin. It's the same people. Okay. So, and mind you, retail is out. Let's do a little reading. Bitcoin's move above 80,000 is testing whether the latest break from S&P 500, which has been completely erased, that particular divergence, is back to normal again. But I digress. I want to get into this. Reflects a real macro regime shift, or is it just the market's most liquidity risk switch being basically enacted and activated? Two different clocks. This is what we're looking at. But where does Bitcoin go? Now, after months of Bitcoin falling the US stock markets on open in terms of direction, volatility, and stress, it appears to be decoupling from the AI Fed S&P 500. And I love the way they say that, because S&P 500, NASDAQ, it's all AI Fed. It's all it is. When the AI bubble busts, when that bursts, when that thing pops, holy crap. You want to talk about things going back to normal. Hold on to your britches. Let me tell you, when that thing pops, good Lord. So you've seen these charts. Let me go ahead and pull these charts up. So the top left one is going to be the 4-hour Bitcoin US dollar chart, right? So, and we're already seeing this. This is barring 4 hours from now, from the live stream that we're having here, which we're back. It retraced beautifully from the buys. I get it. But again, those are institutional sales. Those were OG sales. Large whales are taking profit right now, which you should. If you're a whale, you should be taking profit. Let's be real. No one should be buying more of anything right now. If you already bought in, you might ought to take profit, or you're going to end up holding. You're going to end up holding and crying because of the correction that's about to come. It's okay if it's, just DCA your bag, make it larger. I totally get it. But a lot of the BTCers, the Bitcoiners, they're taking profit because they know where this is going. Now, when you look at the S&P 500 AI Fed, you can see the divergence with Bitcoin retracing back to 81,000. You see a little, downward trajectory, more selling, but it's a different dynamic. It's a whole lot slower in the stocks. That's why when you look at the actual S&P 500 now, this is about a couple of hours ago. When you look at it now, it's completely retraced. It's almost up 100 points again. So, the article, it's not aging very well, but it is what it is. When you're looking at U.S. government, U.S. 10, the yield is like popping in the 10 yield. I'm talking 10-year yield, guys. That dictates the mortgage rates, which I think you see at the coupling. There are a lot of banks that are just setting their own rates right now. They don't trust the markets. They don't trust the bond market. It's crazy right now, but the 10-year is still moving those rates up. This thing was up big time by almost 2%. Okay. It is down now because of the manipulation. The government knows when these bonds go high, they got to do something real quick. When the stocks go too low, they got to do something real quick because of everything that's actually entangled. 401ks, these funds, lots of AI investment, lots of large platforms that are heavily involved. They don't want these platforms to lose money. They don't want a market crash. So they're going to do everything they can to manipulate this situation, especially with oil. But they have the problem with oil now because of the war, and this is why I think the war was so stupid. We already had an economical disaster and we're still headed there. We're still going into a global recession. They can't stop that. So why not exacerbate that with a war? That was stupid to me. It's still stupid to me. So when you're looking at these futures when it comes to WTI, you have the index steady growing. This is not good. So as I back out of this, and let's see here, we need to back out of this. I need to go back to, I've lost. Okay, here we go. So when we back out, I want to read a little bit more of this. So the contradiction shows up as the usual pressure points move against equities all jumped after the last flare up in the actual Iran war. And see, everybody thought that it was over. It's not. It's not over. Just because they changed the name of the operation doesn't mean this is over. Iran is pissed. Okay. So they're fighting again. They don't care. There's no ceasefire. It's war. It's back. It's just not full scale. I believe in the coming days, this thing is going to go full out 100%. And that's when you're going to see a massive correction in all these charts. This is why the FOMO scares me for a lot of people. I see a lot of people FOMOing in right now. We're in overbought territory right now. Look at the RSI. It's really, really pushing towards, it's probably already there now. That correction is going to be nasty. It's going to wipe out and the liquidation. Don't get me started on liquidation. So, Bitcoin is heavily tied into the, leverage as well, like it's never been before. This coming correction is going to wipe out a lot of investors. And it's not just going to be in cryptocurrency. It's going to be in the stocks as well. Treasury yields are under control right now as is, because we know they need to do that. But the dollar is strengthening. Now, this is a thing. The data points, I'm going to read this and then we'll move on. The data points to a more complicated market, and it leads to it, than a clean refuge from stress. BTC may now be trading at an intersection of AI-led risk appetite. The AI-led risk is real, and I think a lot of people need to talk about this. This all hinges on AI. ETF-linked brokerage demand as well, which is doing great. And a geopolitical oil shock that is going to get even worse, that has pushed bond markets back into focus, which they're starting to rise again. Listen, this whole article is basically trying to sell a decoupling factor, and it's just not happening. Jay says every market will be bloody market. Absolutely. Absolutely. Because they keep doing stupid shit. Jay, you got to pull out of this. You got to pull out of the Middle East. You got to lick your wounds. You got to take your losses, and you got to fix this economy, because money moves the markets. I'm sorry. The institutions and the ETF vehicles, they're not going to be able to hold this too long. Sooner or later, they're going to get weak too as well. There's going to be a full out of collapse when they pull out, right? When these redemptions come to, and don't get me started on BlackRock's private credit. I'm going to do a video on that, on how BlackRock's private credit debacle is about to implode that entire situation. And if you don't think they're going to liquidate, you better think twice, because this is what these people do when they're in trouble. They liquidate. especially when private credit is huge. It's a huge problem right now. And unfortunately, Bitcoin is linked to it. And no one wants to talk about that because that doesn't get clicks. It doesn't get likes. It doesn't get views. It's very bearish. But I'm going to tell you guys, the private credit debacle that BlackRock finds itself in, Bitcoin is linked to it. Bitcoin is going to be affected by that fallout. It's going to catch shrapnel. It's not going to be good because that's the biggest fund. They're the biggest holders next to, MicroStrategies. We got to talk about these things because this is the type of thing that blindsides everybody. You wake up, Bitcoin's at 58,000, and then you're like, what the hell happened? Who sold? You should have been paying attention. You're listening to the wrong person because they didn't tell you about this shit. This is an underlying, quiet, silent bomb that's about to go off, and it's going to send collateral shrapnel all over the place. The private credit situation that BlackRock fights, it's a huge debacle. It's a huge bomb that's about to go off, and our government has no answer for that. And I totally get it because it's private credit. It was always risky, but we have these ETFs, and we have one of the largest fund managers, BlackRock. They are one of the largest private creditors on the planet. And that shit is about to explode. So if you don't think they're going to liquidate, listen, Bitcoin is going to get caught in its crosshairs. I hate it. But when you talk about, and I'll sum this up, when we're talking about this particular decoupling factor, when it comes to Bitcoin, tethered to US stocks, it ain't happening. It's not happening. I don't think it'll ever happen. So I want to move on to this because, again, this correlates. UAE. Now, you know they got struck again. Iran is back taxing and popping that butt with those missiles. It's back on. There's no ceasefire. And let me get to Jay's actual comment. It says, we are puppets in this world. They have control of us in forms of media, food. The food thing is really, really important for people to understand. And entertainment as well, the programming right there. But now they want to control our money also through CBDCs. Yeah, the CBDCs, they say they banned all that. I don't know about that, Jay. I think the stable coins, they're pretty much programmable as well. So we really don't need CBDCs anymore. The stablecoin push, the Genius Act, it's already a done deal. They don't need a CBDC, bro, to do what a CBDC could do. They don't need it anymore. They can actually mimic CBDC attributes with these look at the Genius Act, man, and you'll see what I'm saying. And then this market structure bill is just going to solidify that. And then the Bitcoin fork. Yeah, that's happening. So they don't really need CBDCs anymore. They don't really need that. They can do the same thing with the infrastructure they're about to deploy. So let's get to this because this is this is the elephant in the room. Iran UAE tensions are pushing Bitcoin towards a record bond market danger zone. I love this article because this is what's up. This is what's going on. All that institutional inflow that's going into Bitcoin right now, all the OTCs that are creating this FOMO, stock market tether, it's in the green. So that correlates, that pushes Bitcoin up even more because you have rotation there. Metals, the metal prices are going down. The dollar is strengthening. These are all blind markers, really retarded metrics, right, that are providing and moving the RSI to overbought territory. At the same time, you have a war that's about to break out. Oil that's about to shoot to the roof. None of this makes freaking sense to me. It's like, why do we see this green? We shouldn't be seeing it. The market should be red as blood right now. Not only crypto, but stocks as well should be bloody red right now. The reason why is because of the manipulation. You can't do that for too long, especially when the bombs really start hitting infrastructure, more infrastructure. When the desalination plants get completely decimated. Energy, electricity plants get completely dead. That's when the manipulation can do no more. That's when reality sets in. That's when you're paying $10 at the pump for your fuel. That's when ordinary citizens start really looking at the government sideways like, what the fuck are we really doing? Then that's when you see liquidations. Then that's when you're going to see massive corrections because people are going to be in survival mode. 401ks liquidate, all that good stuff. That is coming if they don't wrap the war and pull out. So all this green, let's just say, what you're seeing here in the US stock market, what you're seeing with Bitcoin right now, is placation. It's something to keep you busy. It's that shiny object in the room to keep you focused on, so you won't really focus on what's really going on. A bunch of BS that's about to send us to the Stone Age financially. I'm going to read this because this is so relevant. The sub headline is pretty interesting too. Renewed Middle East attacks sent oil and treasury yields higher, forcing Bitcoin back into its hardest macro trade-off of inflation hedging versus liquidity sensitive risk asset. This is what's really going on. All right, institutional inflow, BlackRock, they're just trying to blind you from what's really going on. But when this thing corrects, you're going to really see that the emperor has no clothes. Like Warren Buffett always says. And Warren Buffett came out with a scathing article, scathing interview about what's to come. You might ought to check, look for that and listen to that guy. He tends to know what the hell he's talking about. All right, let's get into this article. Iran attacks on ships, which we did see today and we saw yesterday as well. The war, there's no ceasefire anymore. This happened in the Straits of Hormuz, and the drone strikes on the actual oil industry zone in UAE. That sent Brent over 114. It's still over $100. WTI over $105. They're still both over $100. Now, these are future prices. This is the future markets prices. You can add $35 to that if you want the spot price. That's going to be the real world price that people are paying. Now, Bitcoin registered an intraday trade of around 80,000. It's going to say 81,000. Putting the macro identity to the test of being a hedge against monetary disorder or liquidity sensitive assets that struggle when yields rise, which they're going up again. And cash becomes more attractive. Now, metals, the metals go up too as well. When those bombs start dropping again, gold is going to skyrocket. I think it's going to get to 6K this time, but I digress from that. When the 10-year actually approaches 5.5%, mortgage rates, equity valuations, and corporate borrowing all tighten with it. This is the way things move. Freddie Mac puts up 30-year fixed mortgages at around 6.30%. No one's touching that right now. That was at April the 30th. All right, it's already up. Once again, no one's touching that. When war-driven yields move, this actually pushed 10 years up to around 4.39%. Where are we at now? Let me go ahead and backtrack. I want to see where we're at right now, just to see if this is relevant, still relevant. Okay, so let's slightly down right now, but we're still at 4.4 10-year. What is the article saying? Okay, yeah, so slightly down. Let's continue. About 20% of global oil and LNG supplies moves through the Strait of Hormuz. It is completely closed right now. I think they put more mines up there. The blockade is laughable. There's no armada. It's laughable. Iran has been moving to and from. The thing is, we can't move in because they actually hit a couple of our destroyers, which has been denied. That actually happened. So it's a shit show, big time. Let's continue, which is why the market reaction spreads immediately from crude into rates. The Eurasia Group warned that without a deal to reopen the Straits of Hormuz, U.S. gasoline could reach around $5 a gallon. That's an average, guys, of $5 a gallon. I don't think you guys are ready for this on the East Coast. The West Coast is already dealing with almost $10 a gallon. They're used to it. I don't see how in the hell you can be used to that, but they're used to it. I don't think the East Coast, the Mid-East, the South, I don't think we're ready for an average $5 a gallon. But this is where we're going. While AAA's national average is around $4.45, this is recorded yesterday. Both numbers frame the inflation risk as well. Hyperinflation is coming. That feeds into rate expectations and complicates the Fed's position. Now, by the way, the Feds are not going to touch the rates. Jerome didn't touch them. I think Warsh may even raise them. I don't think that was a good appointee by Trump. You're going to get the direct opposite of what people think when it comes to Warsh. This is crazy. So the macro shock is no longer isolated to oil. This is what I want to get to. Crude, yields, mortgages, and gasoline are all rising together. So there's that symbiotic relationship with all of the four. There's no divergence there. They're all walking in step. This is bad. This is so bad for investorship, buyership. This is bad for stocks. This is bad for crypto. This is bad for ground level spending. This is bad for retail. This is bad across the freaking board, especially with the oil, with the fuel prices. And not to mention jet fuel, 50% up. That just killed Spirit. That just killed the Spirit Airlines. Everybody's like, oh, they had issues 6 months ago, 6 years. No. The actual 50% spike in jet fuel is going to ground a lot of aircraft. And it may even take Delta Airlines out too as well. So these things are happening on the ground level, but yet, as long as they keep the stock market manipulated and keep it green, no one cares. As long as Bitcoin is pushing $85,000, most of the people who are looking at it, they don't care. They're just trying to like FOMO in. They don't care that Delta Airlines is about to fucking go out of business. They don't care. Well, they've seen the Spirit Airlines thing because that's like the cheapest air flight. So everybody was pissed about that, but I hate to tell you guys, but Delta is probably going out of business. Delta Airlines, if they don't wrap this world. So when I tell you this stuff matters, it matters. Bond market matters. But as long as the stocks are green, no one cares, because all of the actual people, the analysts, that's all they want to talk about. Green stock market, green Bitcoin. This is so bad. This is so bad. This is going to end so badly because everybody's going to get slapped in the back of the head. I hate it, man. God bless y'all. But again, all of this moving together, it just spells disaster. It's a recipe for disaster. The calm before the storm is what I'm calling this pump right now, because everybody's happy and they're not looking at the underlying factors here. These metrics are so heavily manipulated. Now, here's the Fed problem. I love this part of the article. Barclays has moved its first expected Fed rate cut to around March 2027, guys. So we're not getting any. I think we're going to go up. I think the next under wars, I think we're going up. But Barclays is saying, you know what? We're not even going to get any actual expected look at this thing into 2027, March of 2027, guys. CME FedWatch know that the traders see roughly 78.7% probability of no rate change at all in 2026. That is coming to fruition. So oil being above $100 keeps inflation sticky. And that's enough that the Fed cannot actually use that particular, just the oil metric is going to paralyze the Feds when it comes to rate cuts, essentially. This is going to remove any of the actual cleaner tailwinds that could affect Bitcoin. You have to understand, what you're saying with Bitcoin is fictitious. It's not realistic. It shouldn't be at $81,000 right now, guys. That's what I'm trying to tell you. The correction is coming. Be mindful of that. Two forces are pushing long end yields higher at once. The energy shock is going to lift inflation expectations. We already see that happening because there's no oil flow. Iran has put a stranglehold there, stronghold. They're stronger than expected. They were underestimated. We screwed up. Well, not me and you and I, but our government screwed up. Okay, they underestimated Iran's abilities to put a stronghold on their strait. They did. This energy shock, this particular energy shock, and like I just told you, crude oil, yields and mortgage rates, gasoline, jet fuel, it's all moving up because of this. So we're looking at the green stock market. It's fake. $81,000 Bitcoin is propped up by ETFs, and they're being ordered to do this, literally. It's to keep you busy while the cards crumble down. The dominoes are about to start falling. So I just want you to be mindful of this. This is my whole point of the show today. Be mindful of the reality of this situation. Okay? Because it's about the proverbial doo-doo is about to hit the fan. And they're not going to be able to clean it up this time. We're just going to have to go through it. The Treasury now expects to borrow around $189 billion in the second quarter and $671 billion in the third quarter. Why would they be doing that? Why would they plan to borrow this much money? You should know why. More supply hitting a market already priced in inflation risk territory keeps yields elevated, even in a geopolitical premium situation. And what I mean by that is, even if everything fades out, there's still going to be some repercussions. There's going to be some delayed effects. Even if they pulled out now, you're talking 6 months to fix that infrastructure, probably 6 months to a year to get, because there's a huge bottleneck right now. It's already done. The damage is already done. We're just making it worse. Okay. Giving a bond sell-off, God forbid that, shelf life beyond any single Iran headline or anything, post Iran war, whether it be good or not. We're still going to have to go through the shit. So HR 5331 says, I am long on oil since 82.5. Man, you're doing good, bro. 12 barrels and a short BTC 81,000. I mean, you're doing, I like that, bro. I really like what you're doing. You're paying attention. You're actually paying attention to what's going on, HR 5331. Congratulations, you're doing it right. Because if you're buying these tops right now, holy shit, you're doing it wrong. Pay attention to what's going on, because this is fictitious what we're seeing there. Now, the IMF, Kristalina, the IMF's actual leader here, Kristalina Georgieva, said on May the 4th, I'm pretty sure I screwed their name up, but listen to what she said. Listen to what she said. Funds adverse scenario is what she's talking about. It's already in effect and warned oil could reach around $125. And she's talking future prices. So you add $35 to that, we're talking about well over 140, really close to a spot price is like $200. That is not good. This is what they're saying this is going if this keeps up. So there you go. And her actual projections take it out to 2027. So if this conflict, God forbid, if it extends itself into 2027, these markets are doomed. You got to know how to play this. You can make a lot. Actually, you could like HR is doing. You can make a lot of money in this market if you play it right, because the writing is on the wall. Everything is in front of you. You just got to know what to pay attention to. You got to listen to the right people. And you got to do your own research. And don't pay attention to the stock market. It's going to lead you to Brokeville. This green crypto market and stock market, if you play this the wrong way, you're done. You're toast. You're done. You got to play it right. And you have to understand these metrics are being manipulated. Do your own research. Because what looks green is actually red, guys. Talking about a wolf in sheep's clothing right here. Look at the teeth. Look at the teeth, and you'll find out that's not a herd of sheep. Look at the teeth. Chevron CEO also added and kind of chimed in on this as well, that physical shortages will begin to appear very, very soon. All this correlates with markets, but the markets aren't actually, they're not showing the realities. Listen to what the Chevron CEO just said. He said that physical shortages will begin to appear shortly in the coming months, given that the Hormuz handles 1/5 of global crude. So why is the US stock market not reacting to this? Something doesn't add up, guys. And you can't just flip a switch and okay, we have overages overnight. Nah, that's not how it works. That's not how these things works. The damage is already done. This is a delayed effect, give or take. I'll say June. When we roll into June, you're going to shit your pants. So if you play this market right, you're going to make a lot of money, because when we roll into June, everybody's going to be shitting their pants. They're going to be like, holy crap, what the hell happened? This is why you need to get your shit right now. Get everything correct now. Get your ducks in a line right now. Don't get twisted. Don't get it twisted with all this green that you're seeing here. Don't let the stock market lead you to Brokeville. Don't let this high BTC price fool you. Okay, get your shit right now. To be honest, you got a solid, calm outlook and are dropping gems. Man, HR, a lot of people don't want to hear what I'm saying, but it has to be said, and hopefully people listen to me, because what they're hearing, in general, on a mass scale from a lot of influencers and analysts, that everything is all good. Bull market, guys. Buy. That is a bunch of bullshit. You have to understand what's going on here, because you can make money in this market, but if you play it the wrong way, you're toast. You are barbecue chicken. You're going to lose everything. So just be careful with this. Play it right. HR, you doing it right, man. The U.S. is releasing up to 92.5 million barrels from the Strategic Petroleum Reserve, which I don't even think we have that, as part of a broader IEA effort. But crude holds it's holding its gains. It's not moving. And gasoline prices keep climbing. These numbers, and I'll tell you why in a minute, point to an insufficient policy response to remove the inflation premium from long-term rates. So they're releasing all this oil, and it didn't even move the needle, because people understand that even though 92.5 million barrels seems like a lot, it can be gone within a week because of the debt. Okay, I think we're back. I think we got a little disconnected there. So we're back. So I had a little disconnection there. So I got to wrap this up. That was a good sign. Maybe I was talking too much. Oil shock, the Hormuz, disruption there. Fed on hold, Treasury borrowing, policies responses to limits. All of this is deficient. The oil shock is real, but no one's reacting to it. The markets aren't reacting to it. That's the deception there. Okay. The disruption that's going on, 20% of oil and LNG disruption. The market's not reacting to this. That's bad news for people who are paying attention to the green, and they're reacting to it. You see the overbought territory that we're in right now with the RSI score. That's not good. That's not reflective of what's really going on, guys. That's why I'm saying you got to play it right. Barclays move into its first expected cut in March 2027. I just told you about that. That's very bearish. So no cuts. That is going to factor in too later on. That is going to be part of the major correction. People are going to realize, man, we're not even going to get a word on a cut into 2027 of March. That news hasn't filtered in because you got a lot of BS analysts that are saying we're going to get a cut. Don't worry about it, guys. We're going to get a cut. Trust me. You're not getting a cut this year. In fact, wars may go up next year, depending on the climate and if this war kind of like moves into 2027. But you got a lot of idiots that are on X right now and on these on their videos saying that we're getting a cut. The cut's coming tomorrow, guys. The wars is going to cut. We're going to get a cut before the year. That's a bunch of BS. We're not getting cuts. There's no way that guy's a smart dude. He's not going to cut rates. I take him. I looked at the hearings. I've been checking out his responses and his particular, the way he sways and the way he moves. Walsh is not an idiot, and he's not a sock puppet for Trump. He's already said that out loud. So he's looking at what's going on. He's paying attention. He's not going to cut. So that's going to be bearish as well going into the fourth quarter. So, here's the Bitcoin contradiction. The hard money case for Bitcoin strengthens the actual environment of war risk. This is interesting, right? And we'll end with this. Energy inflation, heavier government debt, which is crazy debt. Even Elon's like, man, we're done. Even Elon's like, forget the war. Forget all the other crap. Our debt is going to tank us. Just the debt alone. It's unserviceable. We're never going to pay it back. Just that alone, coupled with everything else, we're toast. Heavier government debt. Yeah, totally agree with that. And doubts about money easing as well. All of this in general, which supports an argument for fiat systems that are becoming harder to manage and more expensive to run. This is why we got Bitcoin. This is what they're saying. Here's BlackRock, because BlackRock is about to implode. I'm sorry, guys. That private credit situation is going to make them fold. BlackRock's IBIT, which is pretty large, 63 billion in net assets as of May 1st of this year. And U.S. traded spot Bitcoin ETFs recorded 630 million in inflow on the on May 1st, guys, and they're rolling it in. Almost $1 billion to date within the first week, right? Pretty decent. Institutional sponsorship at a scale that reflects durable views that Bitcoin belongs in portfolios exposed to macro disorder. Here's the gold perspective, because I like gold, but you can't eat gold, right? You can't put gold in your car for fuel, but it's a decent investment. But I'm not going to be a gold shiller. These gold shillers are hilarious. Buy gold. I'm not that guy. I'm not the Peter Schiff guy. Because, you can't eat it and you can't put it in your car for fuel. So a lot of people are like, are you kidding me? I'm not going to buy gold right now. I need to buy bread. I need to buy some eggs. I need to put some fuel in my buy gold. Are you freaking kidding me? So it's not feasible for a lot of people. But here's the thing about gold in this article, and then we'll close on that. Gold's behavior on May 4th complicates the actual picture here. the bullish case for Bitcoin, as even with Iran's escalating oil spiking abilities, with the Hormuz Straits being shut, gold fell 2% as the dollar held firmly higher than expected. This is a thing that's crazy. The dollar is strengthening. This shit is so crazy. I don't think the government really understands what they've gotten themselves into on a financial basis. The debt is already freaking hilariously large and unserviceable. So let's go ahead and start a war. Let's go ahead and block the number one pathway of commodities and energy. And let's spend $1 trillion on a probably a multi-year situation. And by the way, let's go ahead and kill our party's chances in the midterm. This is what's going on. This is so retarded. This is so retarded. So here's something that I wanted to talk about before we got into everything else, and I kind of missed it. But I think I'm going to just leave it for a standalone video. It's about the public opinion about cryptocurrency and how it's actually starting to sway the wrong direction. I'll tell you what, let's go ahead and get it. Let's go ahead and get into it. Why not? Okay. It's very relevant because we need retail. We need external retail to come in. We need external adoption. The last thing we need is for them to turn their head because they really don't know about it. We need them to come in, understand crypto, understand that their business can leverage a lot of this technology. We don't need them to turn their back on us, but this is what's happening. Okay. I read this headline earlier. U.S. voters ranked crypto last before midterms. Now, it's just one paragraph I want to read. The sentiment numbers were broadly negative outside the GOP base. And of course, they're the GOP base. They're the crypto base now. That's what I call the GOP, the crypto base. The crypto party. Yeah, not so much. I think they just used crypto. They used us. I think we need to understand that we've been used and abused. Now, the independents view crypto unfavorably at 48% versus 27% of favorability factor. Democrat leading voters were 54% unfavorable to the 26 favorable values there. So on both sides, when it comes to the actual votership, Democrat and GOP base, there's an unfavorable margin here that continues to grow. And we're going into midterm. So that's not good. We got a lot of shit going on, but this is really bad. Only the Republicans' leaner aspect of this produced a slight net positive at around 41% to 39%. This was posted by traders Sinian. That 62% of respondents said that, and I don't even know the poll size of this. I would love to know the actual poll size, the sample. Respondents said that they did not trust the Trump administration to oversee the crypto sector. Here's the contrary. AI fared way better in the same survey with 46% favorable versus 45%. It's kind of like even there, actually. A net positive that crypto has not achieved. This is interesting. Just 27% of the actual respondents said they had never invested or ever invested, traded, or used cryptocurrency, while another 27% said they had not, they will not buy anything, regardless. Maybe one day, but right now, nada. This is interesting. So AI is getting all the love, and it's a big bubble. This is what scares me. This is why I want to talk about this. Crypto is really losing the battle here when it comes to the crypto AI battle. And we're talking favorability, investorship, things of that nature. AI is starting to win this battle. People more interested in AI than crypto. The margin with the crypto thing when it comes to the voter bases is very substantial. 48% versus 21%. That's a pretty big gap. So this has to change. We need more investorship. I'm sorry, we do need that. So I'm gonna flip back to Bitcoin and I want to get this. I want to get into some more stuff too as well. But we're gonna have to shut it down. $81,000. I'm gonna populate this wheel. Make sure I got everybody. We'll get this giveaway wrapped up and then we'll get out of here. I hope I didn't scare anybody, but I gotta give it to you raw, man. We'll be more positive in upcoming videos. going forward this week, but I just wanted to like really get down and dirty with it, because I can't just tell you everything is good just because the market's green. It's really not. What's happening right now is like a boatload of information, manipulation, I'm sorry. Tons of it. And this is just going to lead everybody down the wrong path. Unless you invest properly, like HR is doing. Not financial advice, but then you're going to make a lot of money. It's bearish investing, but at the same time, you're doing it right. What I'm seeing with the RSI is very scary. We probably are already in overbought territory right now. And that worries me because a lot of people are about to get wiped out this week. I haven't even looked at the liquidation maps. I'm pretty sure a lot of those shorts got annihilated. All right, so I got 4 people I need to put on the wheel, and then we'll give out some soul. Probably gonna do screwed up there. Probably gonna do another random giveaway this week too, guys. I'll definitely announce it. It's gonna be a subscriber giveaway, so everybody's gonna be involved in this one. Not just the members, but this one is exclusive member giveaway we're about to get into today. I got everybody on the wheel. Hope you guys enjoy the short, and I'm going to be doing a video, and I'm going to be recommending some Chainlink like protocols that have the potential to basically do exactly what Chainlink is doing. And due to the fact that Chainlink has achieved what it has achieved, it's going to make it very easy for these platforms to shine, and they're just smoldering. They're way below ATH right now, so it's a great time to get involved with. I'm going to be dropping that video this week. And a couple of these platforms you probably don't even know about. They mirror what Chainlink is doing. They're set up, not necessarily infrastructurally, but they'll be able to, be leveraged like Chainlink has. You might know one of them, but we're definitely going to get into that. So let's go ahead and get into this giveaway. We have the wheel here. And we're going to get 3 winners, hopefully. And I think I made that. I think I said that already, but I'll say it again. In order to actually qualify for these member giveaways, you have to grab a membership and then, interact with the content that I post weekly. And then that'll be your ticket to get on this wheel for the beginning of the week when we do the live stream. So let's go. Looks like we got Colleen 960 is going to be the first winner. I believe so. Absolutely. That's a nice win, Colleen 960. So if you would please, I just need that soul address. Hit me up and I'll get you your reward ASAP. Let's go ahead and get 2 more. I think I need to change the music on the spin. Getting tired of that. I'm gonna call BBs, I think it is. BBZ121. I think it's safe to call that. That's gonna be the number 2 winner, BEBZ121. Let's go and get the last one. Wow, that was pretty close on Tim. You almost got it, man. I'm gonna call Larry. So Larry69-W2F. You're gonna be the last winner. So let's go ahead and recap this, man. That was a really, really decent spin there. So we have Clean 960 is gonna be the first one. Awesome win. You got BBZ121. Awesome win for you too as well. And then we're going to cap it off with Larry69-W2F. Hand clap to you guys. All I need is the actual wallet address. We're giving out soul. And we'll get that to you ASAP. So I'm not seeing anything else. I want to talk about the DTCC lineup for the actual tokenized securities at launch. They're going to be doing 50 giants. Ondu is actually a part of that group, which is very, very cool. Hand clap to Ondu Finance. And last but not least, I'll just throw this in. Coinbase warns against state-by-state prediction market chaos. Back CFTC oversight. They're just being little snitches. They're mad because they lost. They're mad because they lost out on stablecoin rewards. They can't get all those fees anymore. So by the way, they're saying they're cool with it, but now they're starting to rat on the states in the way they're regulating their prediction markets. They're backing CFTC oversight. Oh, Coinbase has turned to a bunch of rats, man. That's crazy. All right, guys, I got to get out of here. Hopefully, I didn't scare you off with the content, man. I just want you guys to be safe, essentially, and know how to invest. You can make a lot of money because this thing is coming down. This is about to correct. They can't keep this green for too long. And I get it. There's a lot of money wrapped up into 401ks and to the stock market. I get it. But when it comes to Bitcoin, these institutions, BlackRock with the private credit debacle that's about to implode on them, it's going to get ugly. So, and then the war, right? We still have this war going on. It's about to ramp up. The oil is about to go up. Investorship is about to go, through the ground, essentially. People are going to pull money in. They're going to be more retractive. This is going to cause a correction. So you need to play this market right. Don't get fooled into investing in things at the top. Watch the dev teams. If you have an incognito dev team, get out. I will be selling meme coins like crazy right now because this is about to go down, but that's just me, right? Just be mindful of the situation. Pay close attention, if you will, to the metrics, not what you're hearing, but do your own work on the metrics and what's going on with the overseas, because that's what's going to dictate this. All right. With that being said, you have a great day and we'll see you on the next show.